Hello and welcome. You're watching ET Markets. I'm Tanya Aneja. Well, the rupee dropped to the psychologically important mark of 80 against the dollar today, taking its year-to-date fall to about 7%. Now you must be wondering, why is the rupee falling? Where is the Indian currency headed in the near term, and how will it impact you? Today, I'm going to be joined by a very special guest who will decode all these things for us. We have with us Sugandha Sachdeva, Vice President, Commodity and Currency Research at Religare Broking Ltd. Thank you so much, Sugandha, for joining us on ET Markets.
Yeah, hi Tanya, good afternoon, and thanks for inviting me here.
So last time you said it's all about the story of dollar. Also, the outflows from Indian markets are pressurizing the currency. Now that the rupee broke the crucial level of 80 against the dollar, what's your fresh perspective? I mean, what has led to this steep fall, and what are the factors dragging the currency down?
Yeah, there are a host of factors which are actually dragging the Indian rupee, wherein we have seen it reaching past the pivotal 80 mark as well. So there is a complete rout in the forex market, especially in the emerging market space. So dollar index, yes, has been inching higher, but then we have seen some cooling off in dollar index. But then the rupee is still continuing with its selling spree. It's majorly because we have seen again a strong advance in crude oil prices. As of now, market was expecting that Saudi Arabia, which has a spare capacity of around 1.5 million barrels per day, might increase its production. But then there are no hints on that. And US administration has been pressurizing the OPEC producers to increase their output. But yes, to no result, to no avail, markets will now be eyeing the 3rd August meeting of the OPEC producers, wherein they might ramp up their output. But then in between, since OPEC plus producers are not increasing their output, we have again seen a strong advance that has come in crude oil prices. And that has been the major reason why rupee has been depreciating this week. There is strong demand from oil importers, and they are actually hedging their risk also. So that is the primary reason rupee has slipped beyond this 80 mark as well. Besides this, obviously there have been concerns about the global monetary tightening conditions, so that has also been leading a lot of outflows of the domestic markets. So year till date, if you see month on month, we have seen significant outflows from the domestic markets. As we spoke about last time also, we have seen close to $33 billion of outflows this year. So this is also a major cause of concerns. And besides this, once we see steep advance in crude oil prices, it actually leads to a lot of concerns about the swelling trade deficit. And this year, as we spoke last time also, there are strong expectations that current account deficit might increase to 2.9 to 3% of GDP. So that's again a cause of concern, and all of these factors in confluence are actually leading to a lot of selling pressure that is coming in the Indian rupee. But I think there is one ray of hope here. We have this ECB meeting which is lined up this week. And given the fact that we have already seen Euro and USD at parity last week, so Euro has been able to find some cushion at parity, and we have seen a rebound that has come in Euro. Markets are now expecting the ECB to actually hike interest rates at the forthcoming meeting. Given the fact that there is a lot of concerns about inflation in the Eurozone, which is almost at record highs of around 8.6% seen in June. So now the equation might change a bit. Earlier, what was happening was that it was US Fed which was actually tightening very swiftly as compared to its peers. But now, if we see ECB also tightening, and given the fact that inflation is surging higher, so we may see dollar index coming under certain pressure. So that might aid the Indian rupee to a certain extent. So that is one ray of hope here. Besides this, we also are seeing that RBI and the government have been taking a lot of steps to curb this fall in rupee, and we are seeing a lot of resilience around this 80 mark, which is acting as a psychological support as well for the Indian rupee. So what we feel is that there can be some more pain, given the fact that there would be a lot of hedging demand for rupee. Maybe from oil importers and other corporates also who have unhedged currency risk in the market. So that might take the Indian rupee slightly more lower, but then I think the worst is behind us. It's going to get over in some time. So I am not expecting rupee beyond 81, at least in the near future. So I think it's rather likely to reverse course from 81 mark. We have already seen pressure coming in the dollar index. So that will certainly aid the Indian rupee.
Okay, worst just behind us. That's the word coming in. Also, Sugandha, I know it's a bad news for us, but for the benefit of our viewers, I would like to understand it from you that what does rupee at 80 means for our economy? I mean, how is it going to impact the common people of India?
So, in terms of the common people, as we spoke about last time, also imports are actually becoming a lot more costlier. So, a lot of sectors are getting impacted. So, be it the engineering goods or several other sectors which are getting impacted. But then, if you talk about the common man, obviously, a lot of major dent would come in for students who plan to study abroad. Normally, the session starts in September, August, September, and many students actually travel abroad for their overseas education. So, rupee from 77 to 80 mark, it's going to be a big dent, going to make a big hole in their pockets, their parents' pockets. And besides this, many travelers are also going for abroad vacations. So that is also going to hurt them. So rupee has a major impact on a common man. In terms of sectors also, but then there are some benefits also. It's a boon also for certain sectors, especially if you look at the agriculture produce, the IT sector. We export a lot of rice and wheat. So that sector will certainly benefit. We export a lot of gems and jewelry. We export a lot of textiles. So these sectors will tend to gain. Besides this, leather, pharma, these industries would actually increase their forex earnings. And one more silver lining here is that we are going to gain significantly in terms of tea exports. So Sri Lanka used to be at the top position in terms of tea export, but then because of the economic crisis in Sri Lanka, we could certainly take advantage of that, and we can certainly increase our exports, especially to Russia, where we are not using dollars. So it could be a rupee denominated equation, and there we can actually stand to gain. So there are certain sectors which tend to witness a lot of losses because of the import cushion, but then there are a lot of sectors which actually tend to gain, especially IT, pharma, agriculture produce and all.
Okay. And what has been the RBI response? I mean, what do you expect the RBI to do so as to cap the rupee depreciation?
So we have already seen forex reserves declining from close to $642 billion as of September 2021, and they currently stand at almost $588 billion. So RBI has been intervening in the market, but RBI stance is not to actually look at a certain value for the rupee. They are in for stability in rupee, so they have been trying to curb excessive volatility in rupee. So if you look at today's movement also, if you also look at the broad movement, we're not looking at rupee as very volatile. It's been a gradual depreciation. And as of now also, we are witnessing a lot of resilience around this 80 mark. So I think RBI has been proactively intervening in the market, and they will continue to intervene, and they might expand their forex reserves as well if required further. So that will certainly aid the rupee going forward. So considering all these variables, I think we are not looking at rupee beyond 81 mark. Government has also come out with recent measures like rupee international trade mechanism. So that will also certainly aid rupee. And as we spoke about last time, the government has recently increased the import duty on gold also. They have come out with levies on export of oil products also. So all of these are measures to curtail this volatility in the Indian rupee, and all of these variables will support rupee. And one more factor is there. Fed has been aggressively hiking interest rates. But then if you look at the longer term inflation expectations in the US, they have come down slightly. So earlier market was anticipating 3.1% 5-year inflation expectations, but then they have come down to 2.8%. So that has led to the concerns about aggressive pace of rate hike by the US Fed that have kind of receded. So these concerns have receded, and that is leading to some fall in the dollar index. We also believe that Fed might hike interest rates by, let's say, 75 basis point at the forthcoming meeting, or probably by full 1 percentage point. But then they would not be able to continue with this pace for a very long time, because that would actually lead the US economy into a recession kind of a scenario. So they might actually have to reverse their stance going forward, rather at least pause their rate hike cycle towards the end of this year. So that will also aid Indian rupee, because that might reverse the outflows that we have witnessed. That might lead to some renewed inflows into the domestic markets, and that will also aid rupee. So now we have been speaking a lot about the rupee depreciation now, but now there are times when we are likely to see a reversal in trend from 81 odd levels, and we might see rupee erasing much of the losses that we have seen this year.
Okay. Lastly, before we let you go, Sugandha, I know you're saying 81, but do you think that the rupee could slip to 82 against the dollar in this financial year? I mean,
it is a possibility. Yeah. So I'll have to discuss two variables here. First, it means that Fed will keep hiking interest rate at a swift pace to combat inflation. Secondly, if we see the energy crisis worsening further, so we are already seeing that Europe is grappling with an energy crisis, and Russia has actually stopped flows of gas to certain countries in Europe. So if that crisis escalates and crude oil prices continue to rise further, there's no increase in production from the OPEC countries. In that scenario, 82 is also a possibility. If the energy crisis worsens further, 82 can also be seen. So in that scenario, we would also want to see dollar index holding above 109.50 mark, which is a very strong resistance area for the dollar index. So in case dollar index manages to sustain above 109.5 mark, we can see it heading towards 111 to 112 mark as well, which seems slightly unlikely at the moment. But if the energy crisis worsens, the situation deteriorates, that is also a possibility. We might see safe haven flows in dollar index in that scenario, and that would be very negative for the Indian rupee.
Okay, all right. On that note, thank you so much, Sugandha, for taking the time out and being with us here on ET Markets today. Thank you so very much.